Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today I'm joined by Paul. How you doing, Paul?
I'm doing well. How are you?
I'm good. It's been a fun couple days in the market. All right, let's jump into some charts real quick. We'll talk about some TA, what we're seeing, what we're thinking, and then we will dive into the news in a little bit. All right, so the first thing I wanted to talk about this morning is momentum and balance, right? We've been talking about this a lot lately because the market had a lot of momentum to the upside. And the whole way up, we were asking ourselves, what's going to happen whenever this momentum runs out? Well, it finally ran out at the end of last week. And this week, we're seeing what's happened, which is so far, we are balancing with time, okay? There's two ways the market can balance off momentum. One is with price, by pulling price back down to test, unfilled gaps and weak references below. The other is to balance with time, that is going sideways in a range for however long the market needs to before it breaks higher or breaks lower. Now, some of you might be thinking, Charles, wasn't yesterday the first day of the market beginning that pullback with price? Aren't we going to start a downtrend now? And I would argue that it's too early to make that call. I was making the same argument. Yesterday, particularly at the end of the day. For anybody who was watching the Brigade live stream at the very end of the day, this is what I said. I think this market is pinned. Pinned is a term that we use to describe a certain way of balancing with price. With time. There's two different ways to do it. One is an old-fashioned balance area. And the way an old-fashioned balance area works is the market pushes up to one end, down to the other, up to the other, down to the other, up to the other, so on and so forth like that, right? That's an old-fashioned balance area. But there's something new that commonly happens in markets these days, which is a market being pinned. And it doesn't quite work exactly like a regular balance area. It's more like the market just picks a level, often where there is a lot of cumulative volume, and it just pushes away from that level and pulls back. So let's just pretend that the market is pinned here. From the moment that we got the signal that the momentum up was over, which was right here on this day, let's imagine that the market was pinned. Well, it went lower that day. What did it do the next day? Pulled right back up to the pin. It then tried to go higher. What did it do? Pulled back to the pin. Tried to go higher. Pulled back to the pin. Tried to go lower. And what did it do this morning? Pulled right back up to that pin. This is what happened both yesterday and now again in the overnight. Let me just, there we go. Clean that up a little bit. So if we expand out yesterday's range, we can see they tried to take the market lower. They got a bounce. They got one more push. And then what happened? This is what's really important. What happened from this low all the way right back up? Same thing just happened in the overnight market. All right. If we
Charles,
expand, go ahead.
Just to point out as well, I mean, NQ, I agree, it can be balancing with time, but NQ did trade a 400-point range yesterday. So there were lots of opportunities to hop in for 50 points here and there. I mean, like 10 opportunities probably to hop in for 50 points.
Yeah.
Just to follow in the trend.
Absolutely. Yeah. Let me get to that in just a second because
Okay.
ES and NQ are doing their own things. Sometimes the markets move perfectly in sync with one another, and sometimes they're each kind of doing their own things. You're right. Yesterday, the NQ started to balance with price while the ES was still balancing with time. And I'll get to that in just a second. Thank you for bringing it up.
Okay.
But real quick, I just wanted to reiterate my point here. You can see in the overnight, again, same thing as yesterday. They tried to take the market lower and it pulled right back up. They did it again in the overnight. Tried to take the market lower and it pulled right back up. This, to me, is not what markets do when they're bearish. When a market is bringing in more sellers and continuing momentum down, this is not what it does. It doesn't keep completely V-shaping right back up to where it was. This is a sign that the market is pinned. and that the further it gets away from that pin, the more likely it is to get pulled back to it. Just like here getting pulled back, just like here getting pulled back. Once again, the market tried to go away and it's getting pulled back. So I would describe that pin as being somewhere right here around 56, we'll call it 33 to 38 area. Okay, that's where that pin is. So I think until we break away from the pin, and again, this is just the ES, until we break away from the pin, we should assume the market is going to keep coming back to it. The market is going to keep coming back to this level again and again and again. Same thing to the upside. If it starts to move higher, we should assume it's going to come back again until it is successfully able to break away from the pin. Okay, so now if you're bearish today and you're thinking the market needs that larger pullback with price, what are you looking for to convince you that it's going to break away from the pin? First and foremost, let me close these back down. First and foremost, you want to see resistance below 5604. We've got a large node of volume from yesterday and a large node of volume in the overnight. A lot of tug of war right there around 5604. Okay, so the first thing you'd want to see is the market push below there and turn that into resistance. That can get you bearish to head down and repair the poor low that we left behind yesterday on the ES. Okay, so you would expect if we get resistance at 5604, the market is heading lower to 5578. If we get to 5578 and we get new selling down there, disregard everything I've said. The market is breaking away from the pin and it's going to go lower and you should be bearish for continuation to the downside. But if the market just pokes below yesterday's low and pulls back up, that pin will likely pull price right back up to 5630 once again. Okay, so the level to watch to give you an indication of what's happening is 5604. The level for confirmation it's going to keep going is 5578. Okay, so that's the ES. Now, what about if it goes to the upside? As always, the first target is getting above the overnight high and then looking to test the previous day's high, and we're just monitoring for continuation. If they get above the overnight high and get support, we assume they can get to the previous day's high. If they get support, we assume they can repair the poor high at 56.50. If they get support, we can head back up to 56.69. Okay, so just monitor for continuation there to the upside. Don't get overly bullish above 56.69 because I think they'll get pulled right back down to that pin again. Okay, now let's jump over and take a look at the Q because it is moving a little differently than the ES. So yesterday, the NQ, well, there it did it in the overnight. Yesterday, the NQ started to re-enter an old gap. Okay, that is a very important signal. It is very rare that the market would re-enter a gap like this and then instantly turn around and start heading higher. Once the Q re-entered this old gap, we could have been balancing with time if we'd have just stayed above it. But the second we re-entered this gap, we increased the odds significantly that the market wanted to fill that gap, that the market wanted to get back down there to the high from looks like 14th. Okay. So it is okay to be more bearish on the NQ. The NQ is not pinned the way the ES is. They're both balancing, but the ES is balancing with time, whereas the NQ is now confirmed to be balancing with price. Okay. As you can see, they ended up filling that gap in the overnight last night. They ended up getting down there and filling that gap. Now, we don't count that as a gap fill, as regular trading hours. That gap is still unfilled. So to me, that is still a target to the downside for the NQ. What would tell you that you're wrong? New buying above the overnight high would look to come back up and test the opening price from yesterday. Okay. And new buying above the opening price would mean the momentum down is over. So if they can get the market above 19,520, it is bullish to head up and test 19,625. If they can get new buying above 625, it means the momentum down is over. Okay. But if they start to push up this morning, get above that overnight high, and they get smacked down, you should be bearish to come back for that gap fill. because the NQ does look like it has momentum down. Multiple days of lower highs and lower lows. And they have that giant magnet now of a gap fill, which once we re-entered that gap became a much higher probability would happen. Does that make sense, Paul?
Sounds exciting. It's exciting, can I say?
Yeah, I mean,
See if it comes true.
think about it like that. Think about the market looking above the overnight high, right? Failing and pulling back in. I mean, you talk about potential to make money, you know, between 19,505 and 19,205, there's a lot of opportunity to make money. You don't have to be in the trade the whole way. You know, there's plenty of opportunity to grab bites on the way down and make a lot of money. Knowing that, the higher probability is the gap fill unless they can get new buying above the overnight high.
Yep. That feels like what's going to happen to me.
Well, there you
But
go.
what do we have to do? We have to be like water, right?
Dude, yeah, I literally couldn't say it better myself. That is the thing.
So?
Yeah.
Okay.
Let's take a quick look at Nvidia, just because I know there's some curiosity in the chat about that. Yeah, so Nvidia is in the exact same place as the ES. It's in that balance area. It looks like they're going to open a little bit lower, which would be a breakout of balance. So I would be looking to see when they come back up to 124-ish, do they turn that into resistance or not? Okay. If they come back up to 124 today and that becomes resistance, look for a further pullback in price as a breakout of balance. But if they come back up there and they don't get resistance and they rotate back up, you know, into this balance area, I would just draw it like this right here. If they come back up and they don't get resistance there, they're heading right back up to that balance area high. Okay. There's going to be a lot of traders short right now in the pre-market. If those traders don't get what they want today, which is continuation lower, they are all fixing to get squeezed. Oh, yeah. All right. Well, Paul, what were you saying?
I was going to say, it's amazing to me. I mean, Nvidia is reporting fantastic earnings. And what does that mean? Well, they just weren't fantastic enough. So, you know, it's got to like, is it going to be, you know, what exactly is going to happen? Who knows? It's just unfortunate.
Yeah, I mean it's the most complicated thing about fundamentals, right? Is that it doesn't matter what the market, what the company does. It doesn't matter if they have good earnings or bad earnings. What matters is what's priced in. It's what the market is expecting to happen, and then the reaction to that is always the opposite. Whatever, if the market's expecting good numbers, and they're good, well, everybody's already long the market. So there's no one left to go long. So then, oh shit, all those people got to start to cover their longs and the market goes down. It's just the market does the opposite of what you expect.
Unless you expect what they expect that you think they're going to expect.
Yeah, and that's what a lot of fundamental traders are trying to do. They're trying to outthink the market as a whole and think, okay, what does the market think is going to happen? What is likely to happen as a result? What's the best way to trade as a result of what's likely to happen based on what they think is going to happen? Anyway, I'll hand it over to you. You can talk us through some news.
Okay. So we have the Forex Factory has reported unemployment claims and came really close to being right on spot. 232 forecast, 231 reported. As Charles has just noted, the market has dipped overnight and is moving upward for the futures. So they're all slightly up over yesterday's close. European markets are moving up as well. There's an article in Reuters saying that the European market was able to shake off whatever has gone on with Nvidia. So they're all moving right along. I come into Asia, they're somewhat flat. I don't think they're worried about Nvidia at all. Here, Charles, there's your crypto. Look at that. Bitcoin is up. I have no idea. friend.
Yeah, it's up
Maybe I can do
2%,
some.
but it was down 3%, and the day before that it was down 4%. But yeah, it's
You
up
were telling
2%.
me you can save on wire transfer fees. Okay, let me tell you what,
Uh-huh.
2% is already a number in some people's bank account. I don't know. Whatever
Oh,
can I
that's
say?
well, that's the fundamental problem with Bitcoin. There's two just things that fuck up the use case for Bitcoin. One is the volatility in the price. It's like,
Yeah.
how do you use it as a currency if it's constantly changing value? So that is the first issue. And the second issue is technically the day could come where governments make it illegal. You know what I mean? China tried it and it actually just helped Bitcoin. But if,
Yeah.
Europe and America and, some of these other bigger countries start to say Bitcoin should be illegal, that would mess it up. But if you could ignore those two things, if you can ignore
Yeah,
the
sure. If I could ignore
volatility
those two things.
and the risk, it's a genius piece of technology. All right, carry on.
Fine. That's fine. All right. Nothing much else on Market Watch. Really, the rest of the world, I mean, I just haven't found a lot to report on internationally that I think is going to move the markets. Uh, News in the Middle East is baked in, news in Russia is baked in. Uh, when I look at Reuters, I mean, basically, they're saying, what have we got? Europe has shrugged off Nvidia's results, which is a good thing. Oil is kind of where it's been, and these other European nations are getting ready. I think they're going to move towards rate cuts over the course of the next year. At least they'll probably be forced to, but their inflation is going to be coming down. So other than that, there's not a lot to report newsworthy that I think is going to affect the markets today, at least not so far. So gold continues to rise, and like I've said before, I think it's not going to stop anytime soon, but it's going to be just a slow boat being rising. That's really what I've got there, Charles.
Excellent. Well, thank you very much. Thank you
Yeah.
to the chat. Cortman says that we've got some audio problems. We seem to have audio problems every day. We're working on it. I promise. We're gonna get it fixed. But thank you guys for watching, and we will see you next time.
Okay.
Thanks,
Have a
Paul.
good day.